Hey everybody, it's Mike with thedigitalnomad.net. Thank you so much for watching this video. I really want to get this video out here about the longest running bull stock market in US history, and really I think the history of the world really at this point in time. So I wanted to get my thoughts out there. I wanted to get your feedback. I definitely want to hear what you guys have to say. So be sure to follow up with some things in the comments here, any of your thoughts that you might have while you watch this video that I'm going to be talking about. I'm not sure how long it's going to go, but let's first start with the date. Right now it is December 4th, 2019, and this longest running ever bull market here in US history started back in sometime in March of 2009. So we're over 10 years. So we are the longest running time-wise, because we're approaching 11 years now. And we're also the longest running gain-wise. Now, the market's fluctuated over the last few days. At one point, it was like up to like 32, maybe even 3,300. I think it's down to like 3,000 now. But I think it started at like 666. You can't forget that number. Back in 2009, and we're over 3,000 now. So as in terms of a percentage gain, it is like not only the longest running bull market ever, but the highest return in terms of a percentage gain of any bull market in history. And of course, we all know, if history is correct anyway, what follows bull markets are bear markets. Now, there are some already that I think have developed the idea, the market psychology, that this is different this time, and there's not going to be any bear markets, with technology and the way things are done nowadays, that it's just not going to happen. And of course, if you guys remember the year 2000, Y2K, 2001, the dot-com crash, I remember that. There was a lot of irrational exuberance that led up to that, but I think the thinking was the same. Like, this is a new era, technology. I mean, the internet was young at that point in time, and I think that right now it's matured, and we're starting to see some mature applications of the internet. So things are different this time. They're always different. 2007, 2008 was the housing bubble, the Great Recession is what they call it, not the Great Depression, but the Great Recession is what they call it. And I know a lot of people that are in the housing industry, like myself, and say that that's not going to happen again, that safeguards are in place. But also, I have seen things recently where people have been getting mortgages who probably shouldn't be able to obtain them, and that's usually what happens at the top of a housing market peak. So I think that we are approaching the top of the housing market peak, and I think we've fallen from that probably over the last year. Since 2018, summer 2018 was probably like the ultimate peak, I think, in terms of prices in most markets. And then the stock market, I thought, also was kind of peaked around that time, but it's really picked up. And if you look at the returns year to date, I think we're at like a 25% return now, on this extended bull market. So I'm really wondering what's going on. And let me also let you guys know that I have made mistakes. I do not claim to be clairvoyant. I do not claim to know what's going on. I'm also intelligent enough to know that most people that time the market are simply not accurate. You cannot accurately and consistently time the market. Nobody can. However, you'd think that you'd be able to predict like the ultimate highs and lows of the market, right? I mean, the ultimate lows of the market are when everyone's running in fear and no one wants to invest. And I have even seen some stocks like that recently. Like, if I'm to give my opinion, I think Tesla was down to like 150, something like that, 175 earlier this year. NIO, another electric car maker, was down to like $1.25 in September. I think they've rebounded now and they're like 250, but I was even too afraid to buy anything then. I still don't know about the future of that company. But those are just examples in a bull market. In a bear market, most stocks become like that, and most people are afraid to buy. So right now what I'm seeing is not necessarily irrational exuberance, not necessarily overinflated high bubble areas that are obviously bubbles. I think, like, if you look back at the dot-com boom in 2001, 2001, that some of the ramp ups in terms of pricing just went up so high, so fast, and that was, looking back at it, an obvious indicator that something was wrong. So a lot of times when people will examine the history of bull and bear markets, they'll not use that dot-com bubble, the dot-com crash, because of the ridiculous price gains that happened in those years. I remember that there were some internet funds that gained like 100% in a year in terms of overall growth with a diversified portfolio of stocks, and that's just ridiculous. So I want to know what you guys think. What do you guys think is happening with the stock market? Do you think we're about to enter a bear market? And if so, is it going to be a slow, steady decline or no gains, or is it going to be a sharp drop? I've heard some people say, expect a drop of 40% at any point in time, up to 50% between now and the next 2 years. For me, I will tell you, like I said, I have definitely made some mistakes, and I am not perfect. I have made a mistake here, apparently, at least right now it appears that way. I pulled my money out of the market before Trump was elected. So back around the valuation of about 2,000 in index funds, I pulled out. And, now we're around 3,000. So I've missed out on 33% of gains, if you look at it that way, which is pretty bad. I mean, that's happened over 4 years' time. But still, if it continues, I've really made a bad mistake. However, if it drops 40%, then maybe I've done okay, and of course we just don't know that right now. And as this goes on longer and longer, I just start to get more and more concerned about things. If you look back to last December, this is December 2019, December 2018, there was a big drop, and I think we went down to something like, 2,400, something like that, in terms of the overall valuation of the S&P 500. I'm talking S&P 500 numbers, in case you guys are wondering, because S&P 500 is definitely something where that's a typical gauge to gauge the overall market, and that's in the U.S. That's S&P 500 of U.S. stocks. So if you look at worldwide stocks, you'll find that other places in the world are not doing so well right now, and that's another concern. I think like Europe, and especially Germany, is struggling financially. I think that India is also struggling financially, from what I understand from reading the news. And also there's a trade war with China, which has or has not gotten figured out. It may never get figured out, or it might be completely solved. Who knows? And because of this, if anyone's thinking of investing, if you think about it, if these economies aren't doing well and they're not drawing money in, who's drawing money in? Well, it's the U.S. stock market, S&P 500. So we may have, what's going on is, it may be an asset bubble. It may be an index fund bubble. That's kind of what I'm concerned about right now. I'm not too concerned about the housing market, except in certain areas or certain overly inflated areas that could see some really steep price drops, some of the highest valued areas. And of course, there's the election. Trump got elected, and I think I wasn't expecting a Republican to get elected, which is why I pulled my money out of the markets, because typically when Democrats get in there, they tax and spend, it drags the economy, right? Republicans get in there, they slash, cut everything, and it boosts personal money use or the feeling of wealth, the wealth effect for the general population. That's the difference between going out and pulling yourself up by your own bootstraps and having a socialist type economy. And we're not gonna get into politics now, but that's what I was thinking back in 2016 when I pulled my money out. So now it looks like Trump might get reelected. Who knows? And of course, Trump has done an amazing job, and this is not about politics, of just slashing costs everywhere. Yes, there's a lot of people that don't agree with what he's done, and a lot of things like with the economy and cutting things there. I say, like, let's put it this way, for the environment, he has definitely cut things with the EPA and other associations that cost a lot of money, and it's gotten a lot of Democrats up in arms. But at the end of the day, that has created more liquidity for a lot of people. There's more cash available. He's slashed costs in that's just one example. Every little way you can. He's amazed me in the way he's been able to slash costs, and because of that, I believe boosted or artificially inflated or continued this bull run where maybe it shouldn't have continued. He's also been really hounding the Fed and other organizations to keep interest rates low and actually make recent cuts. Something that I feel like past presidents haven't been able to do. So he may be able to do that effectively. He may continue. I don't know. What do you guys think? Another thing is negative interest rates. We may go into negative interest rate territory where people actually pay you money to borrow money. And some countries in Europe, I think like the Netherlands, are like that right now. So what do you guys think about negative interest rates? How is that going to affect this bull market run? I mean, it's just like I guess we're getting up to the end of like what most bull markets are, right? Most bull markets last, I think, 4 to 5 years on average. This one's 10. It's the longest one ever. It's the biggest gains ever. I still have my money out, but I keep thinking about putting it back in. There's this feeling of, oh my gosh, I'm missing out, right? And that's what happens at the top of markets. I'm missing out. But I feel like maybe patience is what's needed here. And if you guys have money, if you guys have a decent net worth, if you guys have no money, let me know. What kind of perspective do you come from, and what are you doing with your money? That's what I want to know. I mean, because I feel like, in the past, I've always wanted to try to time these markets. At least I've been burned. I've been in the markets long enough to be burned by, like the 2001 dot-com bust. I've been burned by that. Burned by 2007, 2008. Burned by that. I bought in at some really low prices at the end of 2008, which was nice. And that really helped things. And I'd love to do that again, which is why I'm sitting on cash right now, waiting for these opportunities. Are you guys waiting for opportunities? Definitely let me know. I want to find out what you guys are doing, find out what the sentiment is, and not just the overall sentiment. I know what the overall sentiment is, okay? The overall sentiment is this market's going to keep going. Get in so you can get these gains in 2020. Trump's up for re-election. I think that, in my mind, he's going to do everything and anything possible to keep this economy propped up, even if he knows it's a bubble, just to get re-elected, right? What do you guys think? Let me know about that in the comments. And, he's a businessman. He definitely is used to figuring out how to manipulate and maneuver things to his advantage and usually get his way, right? So I want to know what you guys think about that. And what do you think I should do with my money? Like I said, I pulled it out around the 2,000 mark in terms of S&P 500 valuation. We are around 3,000 right now. So I've lost out on 33% of gains. I thought seriously about maybe putting some of it in last December when we dropped to like 23, pulled out. And, being above where I pulled out is, I don't know, not something I'm really excited to do. And of course, we didn't really have any crash. There was no real crash. And, Trump said it was a good time to buy, and maybe it was. But I missed it again. And I think a good strategy now, if you have not pulled your money out, is to start pulling it out of stocks and into cash or cash equivalents. I will say that for sure. Like I said, and I'm saying that on the heels of me screwing up and missing out on 33% returns. I'm still out. I don't want to go back in. At least I don't think I want to go back in. However, I'm really starting to buy in more and less of the extreme market timing, which is kind of what I'm talking about here, to more of a fire mentality, which is just keep it in index funds, keep it in them all the time. Don't use any kind of target retirement funds or diversification in funds, and just pull out like 3 to 4% a year. Are you guys in fire? Let me know about that too in the comments. I'd like to hear what you have to say. And if you're in fire, what are you doing? I guess if you're in fire, you're not going to pull anything out, right? So much to think about here. Really want to hear what you think about all this, what you're doing, what you recommend I do, where you see things going in the next 365 days. Because, within 365 days, a lot is going to be revealed here. We will know the results of the next 2020 presidential election here in the United States. And, between now and then, anything is possible. So, love to hear your comments. Thanks so much for watching. Be sure to like, share, subscribe. Hit the thumbs up for the bell and the bell for notifications. We'll see you in the next video. Whoop.